As a dividend investor, our primary focus is to find steady and consistent companies that pay us well. In order to retire early, we want to look at a few important key metrics before we put our money to work. First, the company must be growing revenue for the past 5 to 10 years and have nice profitability. Looking at the company Target, we can see great growth. In 2010, Target's revenue was $65 million, and in 2021, it climbed to $93 million. This consistent growth is exactly what I love to see as a dividend investor. Free cash flow and net income also must be growing steadily. Next, we look for a high sustainable payout ratio. The payout ratio is how much money the company gives compared to its total net income. With Target, we can see a 29.6% payout ratio, which is sustainable. A good payout ratio is between 0 to 35%. Now, if a company is above that, they may have a little bit of a struggle finding the free cash flow to pay its shareholders. Note, REITs have a higher payout ratio because they are obligated under law to pay at least 90% of their income to shareholders. Next, we see how long the company has paid and increased dividends. As Target is a dividend king, it has paid and increased dividends for 50 consecutive years. In 2013, if you had one share of Target, you would receive 43 cents. On May 17, 2022, the dividend was 90 cents. As a dividend investor, we want to see a steady increase in our dividend so we can get more money every year. We also don't want to see a dividend cut from the previous year, so we don't get any surprises in income. Next, we want to look for a higher yield. The higher the yield, the more money we make, and therefore we can retire faster. The S&P 500 currently has a yield of 1.37%. As a dividend investor, we want that to be even higher, so we want 2 to 4%. Last, we look at debt to EBITDA to make sure the company is not drowning in debt. This number should be less than 3 to ensure the company can pay off its debt. With these metrics in mind, we will have a better understanding of which companies we want to add to our investing portfolio so we can retire early.